Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
Welcome back to the Gentle Art of Crushing It podcast. My name is Randy Smith, and I'll be your host today. And I'm really excited to have Dan French with us on the podcast today. Dan is the managing director and partner of ATX Acquisitions and ResProp. They are a fully integrated multifamily operator that have acquired over 100 assets worth over $2 billion, and they've had 86 exits with 20% IRR and 2x equity multiple in the last 15 years. So we've got a highly seasoned operator with us today and really excited to jump into it. So Dan, welcome to the show.
Randy, it's a total pleasure to be on. I'm a big fan of what you're doing and really want to, deepen this partnership and keep it going and really hope to add value to your audience and serve them as well.
Awesome. Well, let's jump right in. This is round two for the listeners. We had a little technical difficulty yesterday, so we are fully prepared and going to have just a great show today. I'm convinced of it.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
So Dan, why don't we just jump right in, and can you tell the audience a little bit more about yourself and ATX Acquisitions?
I'd love to. So I've been in real estate for 20 years, and I wanted to, kind of bring out my origin a little bit because it might resonate with some of the folks that you have in your network as well, and also your background as a W-2, crushing it in that world. But in my case, I was very called to public service, and so 9/11 impacted all of us, right? But especially I think for people of my age, I was around 20 years old. I felt really called into public service. So I actually chased that down, became an elected official, and that took me on a journey for 7 years being an elected official. However, during that time, I knew that I wanted to put something, away for a future. I wanted to have a family, a big family, which I now have. I have 4 kids. And, I knew that I needed to do something besides my 9 to 5. So I got involved in real estate investing with a small partnership with someone who I'm still in partnership with for 20 years. So it's been wonderful and glorious, but also very painful at times. So that was a journey, though. That's how it began, and I'm happy to go into a little bit more if you'd like.
Yeah. Well, let's dig into that. I don't run into folks that are in the public space like you are. So I'm curious. You mentioned 9/11. I can remember that time literally like it was yesterday when I got the news, and I know how it impacted me, but it drove you to public service. So what did that look like? Was you said you were an elected official? Was this city or a small municipality? What did that look like?
Yeah, it was slightly even more complicated than that because and many people have had this experience as well. So just getting out of undergrad, I also lost my father to a long battle with cancer. Very close to my dad. And so I wound up back in my hometown, not really expecting to be there actually. And just sort of like stepping up and becoming what they would say, the man of the house, if you will. But, so this journey took me back to my hometown unexpectedly. And I like the saying, like, grow where you're planted. And I became planted there. And I just decided to get involved in my local community where I grew up. So from the time I was 7, this is where I grew up. And my dad was pretty active in the community space, never in a political way whatsoever, but very, community focused, community oriented recreation programs. And so that was kind of like my, someone that I think I learned a lot from. And I just went into this. And then, so, serendipity, a lot of things happen in your life if you put yourself out there. Same thing for getting into real estate. Someone I grew up with and respected a ton due to his work ethic and integrity, approached me and said, "Hey, let's start buying small buildings." And I was immediately all in.
That's amazing. Yeah, no, it's interesting. And first of all, sorry to hear about that loss. I can only imagine how traumatic that must have been as a young man, to lose one of your parents. And I love that saying, "Grow where you're planted," because life's going to throw some crazy things at us from time to time, and you could look at those as opportunities or reasons to get down on yourself and get down on life. Do that and use that as an inspiration, really, to jump in and help and give back. So kudos to you. Thank you for doing that in such a hard time. And you mentioned, this partnership, which, is now a 20 plus year business relationship. Talk about that a little bit, because Peter Rex is a very impressive individual, and clearly he saw in you something that he wanted to partner with as well. So how did that evolve? Clearly he saw you working, he reached out, but there has to be more story to that, I suspect.
Yeah, it is a great story. And when you grow up with people, right, some of them you can imagine doing business with, right? And some of them you
Sure.
can never imagine doing business with. And I
Yeah.
think like Pete and his brother Rob, I was very driven. I think ambitious in the right sense of the word. Wanted to make a big impact in the world. Tend to be a very mission focused in what I do, and it wasn't just about like ringing the bell on a bunch of financial goals that I had. It was seriously about creating future wealth so I can be
Mhm.
more free and have a big family, because it's really expensive. And I've posted
Yeah.
about this recently. People are not having as many kids. And a lot of that is because they feel this financial burden. So, freeing people through being entrepreneurs, finding ways for them to have side hustles and then actually make more than they can in their W-2. This is wonderful stuff. I love how the
Yeah.
real estate world is progressing, and people like you are leading the way. So we need more of it, man. And there's so much opportunity. It's the world's largest asset class, and people need to have exposure to it,
I
in
love it.
multiple different channels, LPs, getting in with folks like you, or being a GP someday. It's whatever
Absolutely.
is in your heart. We need to tool people up to be able to do this.
I love it. I love it. So you mentioned mission focused, and I might be jumping ahead a little bit here, but can you talk towards the mission of ATX and what you guys are doing today? Certainly, I want to go back and hear the whole journey, but I don't want to forget about this mission focus piece, because it ties closely to impact equity and our goal in trying to have impact not only with our LPs, but also with our community members in the apartments I'll bring capital to. So from a mission standpoint, can you talk to that in what you're doing currently?
Yeah, at the highest level, it's about being a faithful steward for folks, and really aligning our interests as much as possible with their interests, and helping them to enjoy their lives. Our investors,
Mhm.
that is, enjoy their lives and sleep well. That's our mission. It's all about service. I like to consider myself a servant leader. It's something I'm working on every day, by the way. It's a journey.
Yeah.
It's not a destination.
Sure.
And I'm trying to get better at that every day. But same thing with being a steward. Being a faithful steward is something you have to really work at, because even if you're delivering great financial results, well, maybe you can be communicating better, or building deeper relationships, or building better communities so people can meet each other and then work with each other, right? And
Yeah.
that's why going to the Best Ever conference was really eye opening in many ways, to see this community that has been like brought together. It's blossoming. Folks are really collaborative. It's not competitive. That's how I love to
Hmm.
be as well. So I think
Love it.
that mission was kind of present within that conference. So I really loved it.
I would agree. Yeah, it seems like this community, as you mentioned, it is um, very different than the sales environment that I had been a part of for many, many years, where it's a little bit cutthroat. It seems like it's zero sum. So if you're winning, you're taking from somebody,
Right.
and that strange competitive nature that comes up when you're dealing with type A personalities that are striving for the top spot. Very, very different in this space. It seems like there is this giver's gain mentality in this industry as a whole, um, which I think is unique, because I've not seen it in any of the other industries that I've been in. So, well, let's dig in, if we can, a little bit about that journey. So you connected, or your partnership started to evolve with Peter Rex. You guys started buying some small multifamily, and then you saw there was some opportunity there. So walk the audience through kind of the next phase, how that transitioned into what it is today.
Sure. So when I started off with Pete, it was around 2004, 2005. And, for a couple of years, we felt like we're on top of the world and very smart. And, I'd chosen all these great,
Sure.
Investments, and we're doing great work. And then, of course, the GFC really hit us very, very hard. And we did a lot of things wrong, and this is what's so good about going through cycles, because experientially you get things baked up into your gut of, avoid this or do more of that, or really, dive deep into this area of expertise so you don't get in trouble ever again. And that's really what happened with us. Like we were pretty much undercapitalized. We didn't know the operations side as well as we clearly as do now. And we were over leveraged. And these things led to us being kind of the poster child for, what all went wrong during that meltdown.
Mm-hmm.
And on the flip side, though, through hard work and determination and just sheer grit, we worked it all out. And we paid back all of our first investors, which is like small friends and family, but folks that couldn't afford to lose any money. So we paid them out through future earnings. So I know how to delay marshmallows. I know how to be, again, a faithful steward just to pay people back, even though I made nothing for all that toil. And it also taught me, being a passive LP, sometimes if things go wrong, especially in our case with a small partnership, I became very, very active. So weekends, holidays, everything else, vacations that were spent just trying to go manage the assets and turn them around. So that's a genesis. That's why a lot of operations is really just baked into my knowledge base, which I think is helpful. And then, but fast forward by 20, Pete gets out of Harvard Law School and goes down to Tampa St. Pete area. Mm-hmm. And this time it has a vision for a much larger play, right? It's a contrarian bet on the great financial crisis aftermath at this point, with Florida raging back. And at that point, people forget that was a contrarian move. A lot of people thought it would be a lost decade for Florida because it was so tourism driven. And, it got hit so severely. And maybe Phoenix was this way too. I'm not as familiar. Texas, if you look at the numbers, didn't have the same type of recession, but Florida was completely devastated. And so we kind of came in as contrarian investors and spun up a vertically integrated platform. And that platform bought $2 billion of assets. So 17,000 apartments.
So Peter Rex leaves law school and has this vision of a large multifamily, fully integrated organization. And you guys, now, did you move down to Florida with him right away, or were you still up in the Northeast for a number of years, or did you jump on board right away?
I was busy running for a much higher office and then losing very badly for that office.
Okay. Very good. So humbling moment, no doubt, right?
Yeah, you have to have failure in your life to keep you humble, and I thank God every day that happened. It closed the door for that public service career, but it opened the door wide up for this private sector wonderful experience and ride that I took with Pete and the team, helping to build it out as an early partner. So I wasn't there day one, but I was there, before it scaled. So I saw the whole scale play. I saw the whole thing build out. And so most of what we were doing before I got there was like proof of concept, smaller deals. And by the time I got there, ready to do, the 100 unit plus type deals.
Love it. Love it. Okay. So you guys move into Florida, he starts growing this organization. Can you talk a little bit about what that organization grew to? You mentioned the $2 billion in acquisitions, but my understanding was you built a very robust property management organization, which is key to the success of growing an organization like that. So what did that look like? What did the team look like ultimately once it was built, as compared to what it looks like today? Yes,
we did. And we felt like that was extremely important to build it in a vertically integrated way, because we were going after such a specific play, which was value add, and many times very deep, distressed, heavy value add in the beginning, because again, coming out of the GFC, that some folks may not even remember this, but like these are buildings that were sort of left for dead. Some of them were very much like either fully vacant, or many buildings have been, cannibalized so that 2 buildings can remain open and 6 are just left for whatever, they're just completely uninhabitable. We took over that kind of stuff. So in the DNA of that company, deep construction knowledge and expertise, scrappiness, really
Mm-hmm.
understanding turnaround situations, and that you can really outcompete the market if you're excellent in a localized way. And
Mm-hmm.
so property management, to me, is never an afterthought. It's always a key to driving success. Because at the business plan level, you and I could be the smartest asset managers and get on a call once a week, but it's not
Yeah.
going to matter. The boots on the ground get it done. So yeah, we
Yeah.
spent a lot of time building the end-to-end real estate investment vertically integrated firm. It became about a 425 person company at its peak.
Wow.
Yeah.
Yeah. And from what I understand, there were a number of awards that you guys received with that organization as well. So this was not just a large property management group. It was a large property management group that was achieving at a very high level, and it was recognized. So I believe there were some best places to work awards that you received and some others as well. Any other highlights that you'd care to share there?
Yeah, at one point it was a fun period of time. 2012 or 13, I think we got the top 5 in total apartments renovated in the whole nation, which was like crazy because we're a small,
Wow.
at that point, small operation out of Florida, and
Sure.
then we moved into Texas about 13 or 14. But then, yes, culture was something we really, really focused on, and still do to this day. And that's where the great the Fortune Best Places to Work award came from. So just a lot of focus on the humanity of real estate, focus on residents that you serve, investors that you steward their capital, and just really be like people focused, community oriented. And this I think I've seen it drives better returns. It drives better performance because people need to be attached to something bigger than themselves.
One of the biggest expenses you have in this space is when you have turns. So if you can create a good community experience, which keeps people to stay in those units longer, and the same is true with employees. So if it's a best place to work and people want to stay and continue to work and work hard for you, then that's just going to help the bottom line, which helps your investors at the end of the day. So yeah, very good. So it's very, very impressive to hear what you guys have built over the years. And then you guys made kind of a change in direction back in 2019 and completely put the brakes on and stopped buying when so many other people were just flooding the market. Probably a good reason to stop. But talk about that a little bit, because it must have been difficult to, go from a group that's acquiring like crazy and building this huge empire to completely stopping and sitting on the sidelines. So what did that look like?
Right. So we're underwriting every single deal that comes out in Florida and Texas, and deals just don't pencil anymore. And we like to be conservative in our underwriting and really downside protected. So at the end of the day, every day you're holding, you're not, every day you don't sell, you're buying again. Right. So we said to ourselves, well, let's imagine a world where maybe it's best to just sell into this frothy environment, lock in our track record, return a lot of capital and great returns to our investment partners, and then sit on our hands and let's see what happens and see this thing play out. Because again, it had got extremely crowded based on where we had come from in 2011, 13, 12, 13, 14, all the way to 2019. So I'm proud of that strategic shift. It was not without a lot of, some pain, and our investor network expected us to keep doing deals. We talked about this a little bit, but so when you're not showing them a fresh deal, but you're giving them huge returns, and they don't have a 1031 opportunity with your firm, who they know and trust, it makes it a little bit difficult. So those were some difficult conversations. And look, we also sold $1.5 billion, not as a portfolio, but as a deal by deal. So that took a lot of effort. We had to almost like transform our company to being a massive acquisition shop to being experts at dispositions. And brokers help.
Of course, yeah. Then that's interesting. So I know we discussed this yesterday a little bit, but that the makeup of the organization needs to change to support a disposition team. So is that, if you're a part of that group, are people worried about employment? Is that, I would imagine it brings up all kinds of challenges that you are the exact opposite of what you had been experiencing up to that point. How did the organization evolve at that point?
This is probably its own podcast, Randy, because there's so many learnings I have, but just at the top level, yes, it creates massive stress. Whenever you pivot strategically, there's going to have trickle down effects to operational and tactical,
Yeah.
needs of your business. And
Yeah.
so some of the highlights would be like, if you're an acquisitions person and you're being told, you're being hired in good faith with our team that we're going to go buy a bunch of deals. And so
Yeah.
you're geared up. You want to be on the buy side.
Right.
When you don't see any more buy side activity, you're going to go somewhere else. And so, of course, we had partners that were locked in, that were fully aligned with our with us as a team in how they had their equity structured. So those folks, of course, stayed around and harvested the equity with us. But some of the acquisition people just said, you know what, I want to go to a buy side shop, and then there's a lot there. And then also for a property management team that really only serves the owner operator model. Those folks might be saying, well, we're a 14,000 unit company. What if we sell 8,000 units or 10,000 units? What's my future going to look like? Because I want to be part of a growing company. I need to be a steward of my own career. And we teach people to be, you're an entrepreneur, whether you're inside of a company or not. So you have to think of your career as a steward. You have to steward that career. So that's that's one of the reasons why we built back up our property management business. So that once we decreased in unit count of stuff we owned, we would size back up on the third party side.
Interesting.
And it helped to keep our team together. It helped us dispo well because people can see upside going forward. And we love the business. Like I love operations. It's not for everyone, but I love building an operations company as well as a real estate investment company.
Yeah, and so it's interesting too. I think, when we see heavy acquisitions, quite often the organizations will, if they're fully integrated, they'll just bring the property management team that was on the existing asset into their organization. And I would imagine the opposite of that is true, is if you're selling these assets, you're selling a well-refined machine with existing property management in place. And if you can maintain that property management, from a buyer standpoint, I would imagine that's very attractive to know that you've got almost a turnkey solution with property management when they're buying these assets from you too. So, yeah, really interesting. I've not thought of that before, but that's another side of this coin that I'm sure will come into play as we see some of these bigger shops start to offboard some of these units as well. So, yeah, thank you for walking through that. That's an interesting take.
Yeah, happy.
So here we are now, 2024. You guys have been sitting on the sidelines like a lot of folks have been. And you've made the decision now to jump back into the Jacksonville market. You had 11 assets there that you bought and have since sold. You've got this existing property management team in place, and you guys are coming back into the market from an acquisition standpoint. So what are you guys seeing that is telling you that this is the time and this is the market to jump back in?
Yeah, I think it does go back to the Buffett style where, we try to be contrarian. I think when you're a contrarian investor, you tend to have greater alpha. So there is a sense now that a lot of people are sitting on the sidelines or they're a little bit scared. So it does take courage and a lot of, just determination and grit to go get deals done right now. But at the same time, on the flip side, because there is some distress, and especially in multifamily, obviously office too, but we're focused on multifamily here. We're going to see a margin of safety on how you can buy deals. So that's what I like. So example, the deal right now is called Portofino Club. It's in Jacksonville, Florida. It's the one I think that you're mentioning, and you've shown to your network. That deal was out with a prior brokerage last year for $185,000 per door. It fell out of contract. It went quiet for 2 months. It came back out with a different brokerage. They called us up. We got activated. They tried to push us up to, pricing like 152, 155. Well, we have it at 148 per door, right? So that's a 20% discount. And by the way, it's got assumable debt. So at a pretty attractive rate. So that to me feels like a deal where we do have some downside protection. There's a margin of safety there. You're getting at a great basis, and then good things happen from there, right?
Yeah, absolutely. Okay. Yeah. So it's this deal that we're talking about. I've been I've been doing due diligence on deals for the last very large number of years, and this is like head and shoulders above other deals that we've seen at the place. It's got the story, like you mentioned, about the year-over-year discounts, even compared to comps that are selling in the market today. And then also, when you take a look at the financing that is built into this, like those two, the basis that you're coming in combined with the debt that you're getting on this, just make this unbelievable as far as a return metric standpoint. So when you look at this asset, we always like to dig into market and looking specifically at Jacksonville. I know there's a lot of players in Florida. It's something that I've been looking at for probably a year and a half or so, but I've not felt confident with an operator up to this point to bring a deal from Jacksonville or Florida at all to my investors. So what was it about Jacksonville specifically that caught your interest, other than your extreme knowledge of it with your experience in the past? But what about the demographics or the market trends are you seeing that make this look like an attractive market?
Yeah, well, first of all, Randy, thank you so much for that's a great vote of confidence, and I really respect your judgment, and I know you're super active in the market and you work with really great operators, so it's a huge nod to us and our team.
Yeah.
But Jacksonville is a place we've done very well, and so we have track record. We do have boots on the ground. And so it's a bit of a bet on Jacksonville, but definitely it's a bet on a specific, this deal. So like I was saying at Best Ever Conference, I wish I could fly everyone into go see this deal in person, because that really makes a huge difference. I've been there a number of times, including during our due diligence with our property management team. And it's just got a great feel to it. And within its submarket is very protected from competition. So, it's right by, if you look it up on a map, it's right by a golf club and golf course and country club, 145 acre municipal park, and a Publix anchored shopping center. And so if you're a family up there, and it has great schools, and the household income in the area is about $83,000. So rent divided by household income is like 20%. So there's room to pop that up. So all these different factors, we're really betting on the deal. And yes, we do love Jacksonville. I think Jacksonville is still going to be a low-cost option for people that want to be in a wonderful state like Florida, which is very business-friendly, has no state income tax. And Jacksonville is continuing to diversify its economy. So, it was called a supernova city by the Urban Land Institute recently, one of only five. And
so what does that mean? What does supernova mean? I saw that earlier today. I've not heard that saying before.
Yeah, I think for them it means like it's growing at a rate that's far surpassing any of its peers. So within some of them are called like 18-hour cities or what have you, and they're banking on a little bit different type of growth. But Jacksonville, supernova city, I think the GDP growth was like 4% there versus what the U.S. is. It's been at 1.5 to 2.5% more like. So it's outpacing its peer set within. So I think Austin will be there, Nashville, and Jacksonville. So it's in pretty good company.
Yeah, absolutely. So, well, we're extremely excited about this opportunity. I know a handful of the investors that I've been speaking with over the last handful of days are really excited about this as well. So now this is your first asset coming back in to Jacksonville. What does the coming years and months look like for ATX? Is there a plan to grow pretty aggressively, or are you still cautiously approaching this market at this point?
Well, it cuts both ways, right? When you're trying to be downside protected, however you see opportunity. So you want to kind of, how do you get greedy in a time where you feel very convicted in the fiber of your being, like, oh, I'm convicted, I want to go buy these deals at great basis, but you also want to be very conservative. So we're always kind of talking about that as a team and trying to stay disciplined in our underwriting. So it's all about, I think looking at these two huge states, which by the way, Texas is the 8th largest economy in the world, bigger than Russia. Florida now is number 14, and I think that's bigger than Mexico. So
unbelievable.
Just to put it in perspective, folks, like, betting on these two states, there's so many different deals, and we are going for 1980s and newer, and 100-unit plus deals. So
Yep.
I do feel like we can kind of thread the needle where we're going to try and get very, very active, but stay
Okay.
disciplined. So, you
Love
know
it.
what I mean? Like,
Okay. So, one final question on the deal or the deals, and then we'll kind of jump into another phase here. But what when I hear Florida and Texas, and when our investors hear Florida and Texas, taxes and insurance come up. So there's a lot of stories of operators that were not prepared for these huge increases in taxes and insurance. So, what are you and the team doing to make sure that that's not an issue, 12, 18, 24 months down the road for both of those metrics?
yeah, look, there's always a bit of uncertainty in any kind of investment you make, but I do think that now the pricing that you're paying for today's assets has really baked in a lot of this, the increases that we've already seen, right? So the increases in property taxes, the increases in insurance, that's already part reflected in the value of what you're getting. And then you
Okay.
have to really do some crafty things. Like we're working with a group called Real Advice, which helps you to challenge your property tax valuation and helps to drive down the cost of your property taxes going forward. So we're doing
Okay.
that. A lot of groups are, and it does help. And so anything that you can do to drive down expenses, because at some level, insurance is going to be what it's going to be.
Yep.
But we have
I'm hearing a lot. I'm hearing a lot of groups are doing these master insurance plans across multiple properties. Are you guys doing that as well, or?
Yes, we are. Yeah. So we benefit
Okay.
from having ResProp being a larger player, having 14,000 units that it manages overall. So that's about $2 billion in assets that it manages. So we're trying to pair all this up and pool those assets together to get better rates.
Interesting.
Yeah.
Okay. So that's interesting that the ResProp affiliation, even though you don't own those assets, you can pool all those properties for insurance quotes, essentially, right?
Yeah. Yeah.
Interesting. Okay. Well, very good. Well, yeah, this has been another very good conversation. I felt like
yesterday.
have a little. I agree. I learned even more today, which has been good. I learned more about you, which is important as well, because I think at the end of the day, there's a lot of deals out there. There's a lot of operators out there, but business gets done between individuals and between people and the relationships that are built. So it's been a lot of fun getting to know you and ATX a little bit more today. And really excited for this opportunity and the many more opportunities I'm sure we'll be doing together in the future years to come. So this has been a lot of fun. So let's, if we can, I do have a few questions that I like to ask everybody on the show. So we will jump into those real quickly. So as you know, this podcast is geared towards the new or newer passive investor. And I'd like to hear if you have any suggestions for the listeners on good educational resources, maybe books or podcasts that can help them on their educational journey in passive investing.
Yeah, for sure. I would say for a foundation, it's going to take you a little bit longer to get through, but try to get through the Buffett shareholder letters. They're wonderful. And I read now them when they come out, I read them every year. And I just think because those folks, a lot of them want to be passive, right? And they want to learn from number one, the wisdom of basically an investment master, but then also just how to think about passive. Yet I want to be up to speed on what's happening. But this is so much wisdom wrapped into those letters, and every year you can see the business unfold and what he's investing in. I think it's wonderful. And then I mentioned to you yesterday, I think the Joe Fairless book, the best ever apartment syndication book. I was shocked at how good it was. Not to say I have no expectations, but for me as someone who, I've been in the game for a while, so it's not it wasn't really geared toward me, but I put myself in the shoes of folks that are just getting started, and that is a wonderful book because it gets through a lot of the jargon and things you need to just know to really figure things out. And then experientially, you have to dig in. You have to, if you get an underwriting, dig in, play around the model, but it gives you a really great foundation to get after it. And then I do think that listening to people like you from the in the moment type of market updates and market sentiment and what to look out for, what to be aware of. I think you do a great job. People like Elijah Brown do a wonderful job. And so I do read you guys. And I'm inspired by what y'all are doing. And I think there's a lot to learn from the people who are just in the market right now.
And I think that's a good example of multiple channels going all the way to Warren Buffett. Of course, I'm about to finish Charlie Mungel's Almanac as well, which has just been an amazing read. If you haven't read it, check that one out.
I'm jealous.
And then Joe Fairless's book.
Yeah.
You do? Okay. It's a little dry at times, but very good read. And then, Joe Fairless's book is really kind of a textbook for the newer investor that's getting into the space. So I would agree. I think those are great choices. So and thank you, of course, for the kudos on this show and the content we're putting out there. So, kind of a fun question here. We talked obviously about most of this yesterday, but I'd love to hear about a recent bucket list item or something you're hoping to check off your bucket list in the near future.
Yeah, the bucket list was last year I was in New York City and got the great opportunity to see the Hamilton play. It's my third time seeing it live, second time in New York, but I was like on the third row, and it wasn't as expensive as you might think, but it was wonderful. You can see the people like sweating and just like spitting from stage. It sounds crazy, but it was like cool. Such a cool experience. My daughter like knows every word of the play, so and we love that.
That's awesome.
Really inspiring.
Yeah, very cool.
Whole story, super inspiring.
Yes, I'm curious. Is there a future bucket list item you and the family or you personally are hoping to check off?
Most of what I do right now is all about family. If I have a bucket list, so I'm taking my family to Europe in June here. So I'm really looking forward to
fantastic.
Spending time there, around a couple of different countries, and just being tourists and having fun and exposing them to more of the world. So
other cultures. That's cultures. Amazing. Okay, good for you too for bringing the whole family. A lot of people would think about that. Well, I guess you're on the East Coast, so it's not as long as a flight as it is from Arizona, but I'm sure that'll be a memory for you and the family for years to come. So very cool. Yeah. All right. And then my final question I ask everyone, if you had $100,000 that you had to invest within the next 30 days and you could not place it in one of ATX deals, where would you place that capital? Yeah,
I'm going Buffett. I'm still investing in Berkshire Hathaway stock, and it's my non-correlated to real estate. I do have some stuff that basically everything is in our businesses, but there is some that I do keep that is non-correlated to real estate, just because real estate can be volatile or what have you. And I just trust in the basket of companies and securities that he owns in that business. It's really a derivative on America and the American economy. And I just think it's going to keep going forward. Now he's getting a little old, but I still believe in that as one of the best investment options if you want to be completely passive.
I love it. I think it's a really great idea. I remember when I first came into the space, and kind of what I suggest to our investors is, generally folks will have 100% exposure to the stock market when I meet them or when they're first coming into the space. And I usually say, pick at least a small portion of your investable capital and consider having some exposure in real estate. And then you see the other extreme in the real estate space where a lot of folks have 100% of their investable capital tied up in real estate. And I think that's the wrong idea as well. It's important, I think, to have diversification, not only with operators and asset classes and business models and regions of the country in real estate, but also into other channels as well. So I think that's a great idea. I'm an index fund investor. And, it's the same type of thing. Like I want to invest in the biggest and the best organizations in the world, both from the stock market standpoint and from a real estate standpoint. So great advice. I've not invested in that one, but I should probably spend a little bit more time. And I suspect if I read through the Buffett shareholder letters as regularly as you do, then that would be a little more top of mind. So good advice all in all.
No doubt.
Well, very good, Dan. Well, thank you so much. This has been great. I'm actually glad that the recording didn't work yesterday. We got to do this again together.
Me too.
But good to get to know you and ATX better, and really look forward to working with you guys in the future. But thanks so much for being on the show.
Same here. Thank you so much. It's been a pleasure and an honor. Thank you.
Awesome. And to our listeners, as always, we encourage you to continue that education journey. But more important than that, make the decision to invest in your first or next passive investment deal. Both Dan and I are convinced that once you do, you will just wish you had done it sooner. So thank you again for joining us today, and be sure to join us again next Thursday for another great episode. Thank you.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.